How are you reading that response to the whole sector as a whole today being weaker?
Carson, I think you have to see BHP share price performance in relation to its peers, and we are seeing Fortescue off by about 2%, Rio Tinto off by about 1.7% and BHP off by about 1%. So in the context of that sector, BHP is performing relatively well, and those miners really seem to be taking their cues off Ben Bernanke's speech overnight. Commodity prices seem to zoom in on the commentary around the weak US economy, and that's really why we saw copper prices down by 0.4% and why we're seeing that material sector under pressure. Coming to BHP's production report, it was a very solid result. We did see iron ore annual production reaching a 12th consecutive year of records. But we know that the key in these production reports for BHP are firstly iron ore and then petroleum. These are the two areas which make up the most of our earnings for BHP. So starting off with iron ore, and I guess the expected iron ore shipments was 45 million tonnes, and we did see that coming in banging on expectations. So no surprises there. That was in line with expectations. The next part is petroleum, where we were expecting to see 59 million barrels of oil equivalent. And we actually saw a touch lighter than that at 56 million barrels of oil equivalent, just a little bit lighter, so no huge concerns there. We saw a big jump in natural gas, and crude actually saw a decline. But if we have a look at oil production, that was impacted by the Gulf of Mexico and the Atlanta shut-in. So I guess all things considered, a pretty solid result, but not really shooting the lights out or coming in above expectations in any ways. Things are going to get better next year, though. There is the Port Hedland expansion, so iron ore production is expected to increase by 5% in 2013. So all up, pretty much in line with expectations. The shares off by 1%, but in context of what's happening in that sector, a pretty good performance by BHP today.
Julia, it's been said that the coking coal story there, which is of course a key source of revenues, coming as the least predictable among their products in the final quarter of the financial year. We know a lot of that's down to Mother Nature, but also striking workers, paying conditions. We've been seeing it at Ford, for goodness sake. We've been seeing it at Coles. We're seeing it in the mining space.
We have seen coal production being impacted by those strikes with the Mitsubishi BHP project in Queensland, and hopefully we'll see a resolution over the next 2 months, but that's certainly been an impact there. But of course, if we have a look at coal and iron ore, both of these are major components in the production of steel, and I guess steel mills, we're seeing a decrease in terms of capacity, so that's a bit of a concern. We have seen production and sales holding up, but we know that prices have been coming under pressure. So I guess one of the things that the market's going to be watching is whether BHP sticks to that guidance of its capex over the next 5 years, given that it'll probably see cash flows at least flattening out, if not slowing down. So we are still seeing production and sales holding up well, but the fact that we are seeing prices down, so that's going to be of a concern, especially in terms of capex, probably past 2014.
Julia, maybe we can ask you about Bank of Queensland as well, just to switch into the banks. We know banks broadly had a fantastic day yesterday, but Bank of Queensland's copped a downgrade from Moody's, even despite a capital raising and new leadership team, as the company itself has pointed out. The pressures on asset quality is something that Moody's has flagged. Is that something that's going to concern the market?
I guess if we have a look at this downgrade by Moody's, which came out last night, it's the second downgrade by Moody's this year. We saw one back in January where they cut from A2 to A3, and now we've seen another notch downgrade coming out last night from A3 to Baa1. So this downgrade really on the back of asset quality, it shouldn't come as any surprise to the market. We know that southeast Queensland, the economy there is under pressure, and we know that the property market is still relatively weak there. If we have a look at Bank of Queensland, though, in terms of its capital position, it is in a pretty strong position. We saw that capital raising earlier on in the year for $450 million. Now, the impaired asset side has been a concern to the market, but we know that they've offloaded their 3 top impaired assets to Goldman Sachs, and that was an announcement yesterday. So that's going to relieve some of the concerns that the market has had. But the fact that it is a regional bank, it's competing against the Big Four, we're still seeing a big exposure to Queensland, and Queensland has been relatively soft in terms of the economy. It shouldn't come as a surprise to the market, so that's really behind that Moody's downgrade that we've seen yesterday. We've seen JP Morgan coming out this morning and actually increasing its rating on the stock from underweight to neutral, and I think Bank of Queensland probably see a bit of a better day. And in fact, it's been outperforming all week. Before the start of the market today, the stock had been up 3.5% in the past week, beating all of the Big Four banks.